Yeah, I mean, I think Bitcoin is, if you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels.
Tom Lee just dropped a jaw-dropping forecast, not just for Bitcoin, but for the stock market, Ethereum, Tesla, and even America's debt dilemma. According to Lee, we're standing at the edge of a historic explosion, one that could catapult Bitcoin far beyond anything we've ever imagined. As the world's technology infrastructure rapidly evolves, Tom believes that Bitcoin, the blockchain protocol, and Ethereum are the core assets built to thrive in this coming supercycle, the biggest mankind may ever witness. But it gets deeper. With the US government now pushing stablecoins built directly on blockchain rails, Tom Lee says Ethereum is uniquely positioned for liftoff. Once blockchain-based stablecoins begin to gain more acceptance, ETH could surge to unprecedented highs. And that's just the beginning. Tom also shares a powerful outlook on the stock market for 2025 and 2026, revealing key trends every investor should watch. Will Tesla continue to dominate? Is now the best time to hold or fold? His insights may shock you. And then there's the elephant in the room, America's debt. Is it a ticking time bomb for the entire US stock market? Tom breaks down the risk and gives his strategy for smart portfolio positioning in the face of rising fiscal pressure. This isn't just market analysis, it's a strategic playbook for navigating the next financial era. But before we dive into Tom's eye-opening insights, do me a quick favor. Like this video, share your thoughts in the comments, and if you haven't already, subscribe for more high-impact updates on Bitcoin, crypto, and everything shaking up the global markets. Let's get into it.
Internet went exponential from 1996, so it's still the earliest days. I think Bitcoin is very useful because in the future, we're not going to be able to trust anything because cybersecurity, there's nothing secure anymore. We can sample your voice. I mean, even someone takes our voice, translates into Korean using my voice, you'll never know what's true anymore. So you need to be able to trust a system. The blockchain, the Bitcoin blockchain is the most trusted blockchain. And that's why the United States wants to have 1 million Bitcoin. US companies are buying Bitcoin. Banks will soon carry Bitcoin as collateral. But Ethereum is really important too. Did any of you buy the Circle IPO or own Circle? Circle is a stablecoin, and they just went public 10 days ago at $31. It's now $242.
What is the ticker code?
CRCL.
CRCL.
Circle is a stablecoin. It's the second largest. Stablecoins are being pushed by the United States government. Here's the thing. Circle runs on Ethereum. Stablecoins run on Ethereum. So as stablecoins explode, Ethereum is the backbone for stablecoins. So I think Ethereum is going to make a big comeback as well. So I think those two are useful. And then Solana I like, but it's not nearly as used as Ethereum.
What's your overall assessment of the market, where we are, and how do you anticipate the market in the second half and 2026?
Well, the stock market in 2025 faced a black swan because Tariff Liberation Day was a shock, and it created a downward spiral in stocks, falling 20% in the fastest pace, or one of the fastest pace in 100 years. There have only been 12 times in history that stocks fell a similar amount and a similar speed. And I think the mistake many people made was that shock turned people bearish. As you mentioned, we did think there would be a correction this year, but the reason I think we didn't turn bearish, even though this was a huge decline, is three things. One, we didn't expect President Trump to stick with the tariff terms. So even though in the beginning they claimed this was the deal and everyone had to take it, we thought they would eventually walk back those terms, which is what's happened. And in fact, what we've seen so far is the tariffs are much, much milder than many people thought at the start of the year. So we're actually in a better place. The second is many economists convinced you that there'd be a recession. Do you remember all these economists said a recession's guaranteed, and that's why everybody panicked and sold their stocks. But we don't necessarily listen to economists. We prefer to watch what the high yield market is doing. And the high yield market, while it showed some turbulence, actually moved in a way that said there might be a growth scare. So there's a difference between a growth scare and a recession. A growth scare just means everybody gets cautious, which is understandable. And the third reason we didn't turn bearish is that waterfall declines, like we saw, usually come back as a V-shaped recovery. And that was our argument, that this would be a V-shaped bounce. And in fact, we were pretty convinced of it because the VIX, which is a measure of volatility, jumped to 60. And if you look at the last 35 years, anytime the VIX has moved above 60, no matter what you think, you have to buy the stock market because that's pure terror. The market is so scared, they're not pricing anything, and that's why you have to buy that. And so stocks had a V-shaped bounce. And now that we're almost back to the old highs, I'm finding a lot of people are still bearish. Maybe in the audience, you guys are still bearish, thinking, I don't see why stocks came back, so I don't really want to buy the stock market now. But here's something to keep in mind. In 2025, we've already had a 20% decline. The chances of a 10% decline between now and year end is very low. It might even be statistically 0%. So maybe the stock market could trade sideways for a little bit, but the chances of us declining again are very low.
I think there's a lot of upside, but also has a lot of volatility, and that reflects the risk. So if we look at the risk reward of Tesla, what is your assessment of the stock?
I think Tesla is one of the most important stocks in the market. Because not only because of what Tesla does. Remember, Tesla is making electric cars, and they have a huge advantage. I mean, they completely changed the automotive industry, not just because they made batteries better. It's also because they have expertise in manufacturing. Now, manufacturing for cars is one of the hardest things to do because of the supply chain. So if they can dominate manufacturing of autos, Tesla will dominate whatever industry requires manufacturing in the future. Okay, that's the way you should think of it, that they have intellectual property that allows them to produce anything that the world makes at a lower cost. Like, for instance, if they decide to make smartphones, I would assume they could actually be one of the most efficient producers of that. They have a huge lead in AI now because of Twitter and their XAI. And with full self-driving, it is strengthening the capabilities of their artificial intelligence. They might even integrate Grok into that. And now they have Optimus Prime and robots. And they are, by a country mile, leading in the US in terms of robots. There was companies like Boston Dynamics that was working on these things a lot earlier, and Tesla has already surpassed them. So if you ask me, Tesla represents a company that knows how to take technology and then turn it into real world products. But they're now at the intersection of everything that's important, because Tesla is linked to Starlink and to space and to Neuralink and to the Boring Company, all the things that Elon Musk is doing. And I think that that's the second part of the story, that we know if you look at the last 100 years, the stocks that changed the world were really led by a founder that did see the world differently. So I think Tesla, as long as Elon Musk is involved, is, one of the most important companies. So I think it's going to do very well.
The U.S. government debt and the physical deficit, I think the market has become much more concerned about the U.S. government debt servicing capability. And I think whether we look at government debt as a percentage of GDP or fiscal deficit as a percentage of GDP, it looks, pretty stretched. Do you think Trump can manage the current, fiscal issue?
When you read the newspaper or you hear financial commentators, a lot of people tell you the U.S. is in trouble because of the deficit, and the U.S. has unsustainable debt. And that's true because we know the path for the U.S. debt is unsustainable. But here's the thing. When I started on Wall Street in the 90s, that's also what I heard on Wall Street. I remember our economists and our bond heads of fixed income saying the U.S. is on an unsustainable path for debt, and that was 35 years ago. So for the next 35 years, you're going to hear the same thing. The U.S. is on an unsustainable path of debt, yet it's probably not going to make a difference. That's my opinion. But I do agree that we're in a very strange world because the U.S. prints money and they print a lot of dollars, and yet the borrowing cost is really low. It's very mysterious to me, but I don't think today's levels represent any sort of break point. And here's a really simple way to think of it. One, dollars is the reason people have used, own bonds, right, and used the U.S. economy. And dollars are mostly used for speculation. For every dollar of GDP activity that we have, the dollar is traded in oil, bonds, equities 400 times. So as long as the U.S. is the most liquid economy in the world, we're going to print a lot of dollars and interest rates are going to stay low. And the second is that as much as you hear stories that say the U.S. is losing its importance, so the rest of the world is becoming more dominant, and that's why the U.S. is in trouble. One, again, I've heard that story for 35 years. Everyone's told me the U.S. exceptionalism has been over, and it yet has never ended. If you look at the 25 largest companies in the world, 21 of the 25 largest are in America. So just because U.S. borrowing costs might change, is Germany going to suddenly be the place where the next Mag 7 comes? Just because borrowing costs change in the U.S., will Germany suddenly be the next Silicon Valley? I mean, if you believe that, then you should bet against the U.S. I'm very skeptical of that. So I think you shouldn't make a portfolio decision thinking stocks are going to fall because someone told you the U.S. can't fund its deficit.
And that's a wrap on today's deep dive. But before you go, let's open the floor to you. What do you think about Tom Lee's ultra-bullish analysis? Are we really heading into a financial supercycle, or is this just another echo in the hype chamber? Let's talk Tesla. Does Elon Musk have too much influence? Could his bold bets and growing empire actually reshape the global financial system? Or are we overestimating his power? And what about the elephant in the room? The skyrocketing U.S. debt? Tom says it's not a risk, but is he right? Could a hidden black swan be building beneath the surface, ready to shake the stock market to its core? These are big questions, the kind that will define how investors win or lose over the next decade. So drop your thoughts in the comments. We want to hear from you. Do you agree with Tom, or do you see a different future unfolding? And if this video gave you value, like it, share it with someone who needs to hear this, and subscribe to the channel. We bring you fresh insights on Bitcoin, crypto, and global finance every single day. Thanks for watching, and I'll see you in the next one.